everybody will be going for a sell. But for some reason, now you just put this big risk to reward, small short stop loss that it will reject from here. Why? Why will it reject from here? I need to know why. Because if I look at this chart, I'll be looking for a sell based on break of structure. It's making lower highs, lower low. Shebi, why are you buying from there? And why did you use limit? Simple.
Well, it depends. From what from what I analyzed, I was not expecting the month to close like this, to close bearish. Okay. I was expecting the month to close some type of bullish, because for the past 5 months, this is it. 1, 2, 3, 4, 5, 6. For the past 6 months, the market has been bullish. So for the overall push, it has been bullish. So we had 1 month of bearish price action. So for me, overall, I'm still looking at taking bulls until this low is taken out. This low is taken out. So any sell I'm taking would be a short-term sell. So while the structure is giving lower lows, lower highs on lower time frame, on the higher time frame, there is some type of support here that has to uphold. And if that support is upheld, then we are still good for a buy, regardless of those mid-trend swings that we are having. So those lower lows and lower highs on the H4 that you are seeing, or H1, or any lower time frame you are seeing, is just a mid-trend swing for me until that low is taken out. So once this low is taken out, then I can start to look for sales. And you can never be too late in a position. All right. So whether this, let's say for example, this happened, this sell happened, yeah, you can still get into the sell somewhere here. If you missed this, you can still get into the sell somewhere here. If you missed this, you can still always get into the sell here. So even if I miss this whole sell here, I will still be able to enter a sell regardless of whatever the market wants to do, as long as the world is not going to end, as long as currencies are not going to crash, or currencies will stop being a legal tender. As long as currency has not stopped to be a legal tender, there will always be an opportunity for me to take a sell or take a buy or take any position. So for now, this buy is the last straw or the last stretch for me to be bullish in this market. So if I want to be bullish in this market, it's just as good as me looking at what the overall time frame, what the monthly is telling me. And the monthly is showing me that for 5-6 months, the bears have come into the market after the bulls have come into the market. You can see this low. You can see that there was a low here. So after this low, we had some type of higher low here. So after this higher low, we had 4 months of bullish price action, 1 month of bearish action, 1 month of bullish sort of continuation that makes it look like a bullish continuation, then they follow through. So I was expecting the month to close bullish. And if it were to close bullish, it will just trigger me, give me that last stretch, trigger me into this trade and move back up. I had an entry inside this area on lower time frame before, but because I had a level low, I had an entry I was looking out for somewhere here before, inside this part before. inside this level. So when it came back, that was the first time I was supposed to enter. I did not. When it came back into that zone again, I thought it would just give me some type of heavy spike, the same way EU gave this type of spike. Yeah, that was what I was expecting NZD USD to just give that type of spike and reject, but it did not do that. So, and EU, this is how EU looked like on the weekly. The weekly was still painting when I was analyzing that that buy I gave on Friday. So when I was giving that buy, the weekly was not even a bullish candle. It was a bearish candle. It was floating as a bearish candle. The daily was also floating as a bearish candle also. The H4 was also floating as a bearish candle while I was looking to get that last stretch of that bullish ride. So I think the market was around here when I gave that signal of that buy, but sucks that we left that trade too early because of the news. So it's still the same thing. It's more technical than what I'm saying. It's more technical than what I'm saying, but basically that's just it. I always say higher time frame holds precedence more than the lower time frame. So whatever I'm doing, I focus mainly on what the higher time frame holds than the lower time frame. Yeah, so that's it for me. But now like this, so I'll have to delete that order because now it looks like this low is now forming some type of another higher low here. So we have a higher low which is higher than this initial low here. So if this low breaks, then there's a high chance that we are going bearish. But if this low here does not break after this low breaks, then we look to use this high to get taken out before we resume any bullish buyers. But currently like this, we have equal highs here. So there's a very high probability or a very high potential that this high will be broken if we get any rejection. So let's say we get a rejection from this area like this, we get some type of rejection back down. Anytime the market is pulling back up, as long as this low is not taken out, anytime the market is pulling back up, there's a very high potential that this high would be broken, so we can go to the next high here and maybe potentially this next high, and maybe we'll push it to the next high. So that's just the basic theory on how I look at and on how I look for potential trades. Did you understand that?
Yes, we do perfectly. Structure-based trading is the other patakpata of all of them.
Yeah. Any other person? Bente, you unmuted yourself. Do you have any question?
No, for now I don't have any question. I'm just following and I'm enjoying the. For now, I don't have any question. I'm just following.
Okay. Okay. Anyone have any question?
This EMA you have on your chart, does it aid your decisions? Like Because for me, I've removed every EMA from my chart. Like I just need it plain so I can trade pure price action and see and know the lows and high just by myself, because make it easy. Because I know some persons will be like, oh, if it's above or below, you buy or sell. But sometimes in order to be consistent, because basically my A plus strategy is simple. I just ensure that on 2 time frames, there's a structure break to the upside or downside, maybe on the 4 hour, on the 1 hour, then I look for sell or buy. That's just basically what I do, because by the time I start waiting for it to be above EMA, and then it might be confusing and all that stuff. So I just remove it, I make it plain. And then I just, not until recently, I know it might be funny, but highs and lows on the higher time frame, they always take precedence over what is happening in the lower time frame, 15 minutes, whatever. So long as it has not broken, your word is always ringing in my head. If it has not broken the low on the higher time frame, just be looking for either buy or sell. That's just it. So I think it has helped, because sometimes I might want to use fib to draw. Maybe it might reject 61.8 and all that stuff, and then it might do exactly 100%, and then I might be like, oh, it's going to sell, but surprisingly it might just reject from that low I drew it from and continue in the direction I want it to go. So I think high and low is just basically trading. I don't really know, Sha. I don't know of any other thing, but I've tried SMC, other block, blah blah blah. The thing is, every one of them, they respect structure. That's the reason why I had to stick to structure. No matter anyhow you want to talk about it, you might say they are manipulating liquidity, anything you want to study online. The basic is structure. That's just it. You just cannot. I mean, look at this whole this last minute stuff on Friday. It still maintained the up structure, no matter. But they will come and tell you that they are sweeping liquidity to the low. All those many grammar is structure.
The thing is this. The truth is this. Everyone, it's for trading. It's perspective based. So trading is by perspective. We are arriving at the same thing. We just have different terminologies for it. So we are still saying the same thing, whether they say they are sweeping liquidity or what. For me, I always say less is more. All right. The less you know too much, the less or the more you are confident taking an entry without having analysis paralysis. So if they say other block or whatnot, they are still saying the same thing. I don't know what other block is. I don't know what most of their terms are, but I still feel that regardless of whatever everyone's trading style is, we are still basing everything based off of support, resistance, structure, supply, demand, engulfings, volume. So it's volatility and all those. So you have different terminologies for it, but we are still saying the same thing. People might not be able to say they trade support and resistance and they say they trade supply and demand, but you are still trading support and resistance, because supply and demand is an advanced way of support and resistance. So it's just the same thing. So if they are saying accumulation, distribution, and whatnot, CH or whatever they call it, that is, I'm talking about Wyckoffs now. We are still saying the same thing, which is higher high, higher low consolidation. So we all are still saying the same thing. It all depends on perspective. All right, and I keep on saying it, less is more. So also this EMA, the EMA is just there for me to understand. I know they use them for I don't be happy use for it, but it's just there for me to know. Oh, okay, it's heavy. It's going this way. It's going that way. I still have indicators, other indicators I use. This is RSI. this is 8
Mm.
years, but
Mm.
I don't always have them on the charts. I can't
Okay.
just be turning this one off and on. It's tiring for me, so I just like to just leave it there.
Okay.
I'm not REITs. I'm not to REITs. I don't even know whether it's there usually. Yeah,
Okay.
so
So I
that's
wanted to ask if there's one stuff I've seen online is the fact that their strategies actually allows them to use very small stop loss and then large risk to reward. So I think
yeah.
that's like the advantage I saw, because they're able to have these very weak entries and it goes their way. So basically, I think that's just one advantage I
It's
saw
also
that they have.
thing.
Eh?
Another thing I usually tell my students is
Mm,
precision. Okay,
yeah.
so you have to be for you to last long in this business. You
Mm,
have to understand money management. You have
mhm.
to understand your risk appetite. You have to understand when to trade and when not to trade. And when you are trading, you have to understand. Hold on, please. Just hold on.
Okay.
Okay. Yeah, I'm back. So you have to understand when to trade and when not to trade. You have to understand that you have to be precise with your entry. So I feel that precision is something you can work on. It's not about the strategy; it's about you yourself. Um, would I want to take an entry inside this area? No, I wouldn't. Would I want to take an entry inside here? I might. Why would I not want to take? Why would I say I wouldn't have an entry here? It boils down to me being precise. So it might be, oh, okay, I want to draw a counter trend line first to see, okay, where is a potential that I might get a third touch? Will I get it around here? No, I wouldn't. If the market starts dropping, where do I think that it will come to? Oh, this level looks like a very good level to have. Okay, so now I'm breaking it down. I'm being precise, so I can go on lower time frame again and say, oh, what is going on inside this level? What is really happening inside this level on the lower time frame? So I can say, oh, this is, and let me change this color and use lower time frame. Then I might say, I want to see what happened inside this week here on lower time frame and call that exhaustion, and maybe go on M5 and look at how the markets, okay, it's just a long week. All right. Then I would want to say, oh, what happened? Where did structure transition? Where was there a transition? We see lower lows, lower highs, lower lows, lower highs, lower lows. Okay. And if you look down here, there is some type of um, lower high here. So you can say, oh, this point
Cannot hear you.
How about now? Can
Yeah,
you hear me?
I hear you now.
Okay, so I don't know what happened. Okay, so like I was saying, there was some type of low here. After
I
this
can't see
low,
your
there
screen.
was a break. Hello, you say?
I can't see your screen.
We cannot
You
see your
guys?
screen.
Oh,
No, we can't see
goddamn.
your screen.
Oh, sorry. Let me share the screen back. How about now?
Yeah, we can see it. I can see it from my end.
Okay. Ejiro, can you see?
Yes, I
Can you
can
see
see
this?
now. I can see now.
Okay. So, like I'm saying, like I was saying, there was some type of low here that broke. You would say, oh, okay, anything that makes the market come back into this area here, I would want to take a buy. So this would be an area I'll be looking out for. This price level here, you'd see this price level. So you might want to say, oh, let me just drop a buy limit here. And this is 7 pips, 7 plus. I don't know how they do this thing, but for me, I always do it 5 pips below the last low for any pair that is not GBP or JPY. So
Yeah.
this is 8 pips, 8 plus 5, that would be 13. So if I put my stop loss at 13 pips and I put my take profit at let's go higher now. I'll use now. I'm not using the I'm not basing it off of a specific time frame. Okay, so I'm just making an example, having an example. Open now. What's going on? Okay, so say now I want to have a take profit. I can as well just say, oh, I have a 13 pip stop loss. I can put it here, which was the last swing, which is the last swing before we got this drop. So I can just say, oh, anything that makes the market come back into this level, that would give me some type of higher low here. That would give me some type of higher low here, a higher low here, and a potential higher low here if the market comes back. Okay, so this is me being precise, having a precise entry. Okay, and I feel that is almost the same thing they do also. So different strategies, different ideologies, but we are still saying the same thing, and it's all precision. All right. So I feel that they work on their precision. They have precise entries, and it's still the same thing I would do. Is just we are just seeing the market differently, but we are attacking it the same way. Yeah. So that's
All right. All right.
really,
Thank you.
yeah, man. Anyone else? Any other question?
So for you both should not mind me. I know I'm speaking your mind. So for every day you want to collect like 50 pips, do you check the weekly, monthly for the same pair every day?
No, I check the weekly, monthly for the. I don't check the monthly all the time. So I check monthly first week and last week. I check
Okay.
weekly, like first day, which is Monday, and I check weekly on Thursday. So Monday, Thursday, Friday, I check weekly.
Then daily, every day.
Yeah, daily I just look at what the previous day painted. So let's say for example, um, I'm looking at trading. Before all this happened, we see this bearish thing happened.
Yes.
So this is Wednesday. Say I come on Wednesday and all this has not happened. I would look to say, oh, let me push this market lower again.
Okay.
Okay. I would say, oh, let me push this market lower again because there's still a level I'm expecting the market to go down to. Okay. So now when Wednesday closes like this, on Thursday, I'll still be expecting it to do like that. But if Thursday now happened to close like this, all right, it means when I come on Friday, I want to either see that bullish push or a bearish push. And if I'm expecting anything, I would want to be breaking that. I would like to have different scenarios painted in my head already. So for daily to start to close bearish, I have to see some type of double top scenario or some type of heavy rejection around this level on the H4, H1, M30 and whatnot. So for daily to close bearish, we have to see some type of rejection around this level. Okay, so we have to see some type of rejection around this level. We saw that rejection, but you can see how it fed. All right. Is it
I'm
Jerosi
here.
there?
I'm here. I understand.
Yeah. So if I'm looking to take a buy because Thursday closed bullish, if I'm looking to take a buy for Friday, I would have another entirely different way of looking at the market. I might say this level held. There was a testing of this level. This level tested. So we had a support on the daily. We had a bearish and a bullish. So I would like to look at the last swing, the last candle before that bearish and bullish candle, and look to see some type of bullish rejection from that area on Friday for me to start to look for bulls. So eventually this is what happened that Friday. You see that break of minor resistance. You see how the market fed around this straight line that I drew on the daily. You see how that rejection happened, that bullish engulfing or the bullish checkmate. That is enough reason for you to have an entry. Or if you are the person that goes on lower time frame, you definitely see that this candle is started to paint, it started to give that bullish vibe before the H4 close. So you could actually have an early entry before the bullish move happened. So it's still all the same thing. All right. So it's just daily. Daily time frame I check every day, and I just to project and anticipate. Weekly I check Monday, Thursday, Friday. Monthly I check first week of the month and last week of the month. Then H4 I check every day. H1 I check every day. Yeah. Not like I'm looking for 50 pips every single day. There are some days I would not see a trade. I wouldn't take any trade. So I'm not going to force myself. Say, oh, I must see trade today. So I might trade like once or twice a week. But I'm always on the chart. My
Okay.
trade, like if the week is, if God bless me that week and I see like 5 trades take, does not mean I'm going to win those 5 trades. I might lose like 2 or 3 of those trades. But
Really? Wow.
yeah,
Okay. I'm asking so that other people will know because personally, it's easy for as a newbie or not say newbie, you could be trading for 10 years, 20 years, and if you are not consistent, you are still a newbie. So
yeah,
while you work on your mentality, it's easy for you to like, oh, Alex, I'm trading, oh, I got 7 trades direct, and then you lose 1, 2, 3, and you feel like you're a bad trader.
nah,
I keep telling people that it's good that people you look up to or people you feel are more profitable than you, when you realize that out of 100 trades, they've probably lost like 60, 70 trades out of 100, but yet they are still profitable. That will make you not to be hard on yourself. Because I
yeah,
remember back then, it was almost like, oh, Alex taught structure today. Okay, good. Let me use structure to trade. I enter 1, 2, 3. He gave me money. I enter the other one. Oh, I lost it. You sure say Alex know what they do. Let me go and check
yeah,
other block. You go and check other block. You look other block, liquidity sweep. The T did not pick your other block. You be like, this one is not working. And then you see, you are just going round and round looking for one perfect thing to do. Or then even your own strategy, you feel like, oh, the settings of the RSI is not working. Let me change it to 7 and all that. Or let me use divergence. You see, you are just going around. And meanwhile, there are traders that it's only divergence they trade every day. If they don't see it that day, they check the next day. That's like the only thing they do. Whether it works, whether it doesn't work, it's just what they do. When it works, they take their profit. When it does not work, they will that same divergence the next day, the next day. So I use the opportunity to tell everybody that every strategy works. I was telling somebody earlier today that my strategy that I use in looking at the chart, my perspective is giving me a sell. That is why it's selling to your entry for a buy. That's
yeah,
just Forex. Everybody's strategy is what makes the market to be selling and buying at different times. So if yours does not trigger or does not work, does not mean it's not going to work. Mostly if you have this 40, 50% win rate, then stick to it. Just do rinse and repeat. So that's why I had to write it in front. If I show you my my board, every day I just go to the 4 hour. I literally is now I've added the daily because daily helps me for confirmation so that I would know that okay, if there's a rejection here, when I go to the 4 hour and I'm looking for a break of structure, I know I'm doing it in line with the daily, like it's rejecting from a particular zone. Not like I
yeah,
just go to the 4 hour direct. So this is how I've been able to refine my own. And then in order to ensure that there is no what do you call it, dragging, maybe loss or whatever, my entry can be precise. I just ensure that the break of structure happens in both the 4 hour and the 1 hour. And then I go to the 15 minutes. It might be retracing. I say, okay, good. It's retracing for me to sell down. Okay, cool. So it might look like it's a buy, but it's a sell. I say, cool. And that's where I enter. But if there is no break of structure on both 4 hour and 1 hour, I will leave the trade. I'll go and sleep. I'll go and do something else. But it took a while for me to adapt, because most times, like anytime you are in front of the chart, you just want to trade. You just want to
nah.
click
See
buy
the
or
thing.
sell. And
See the thing. When you are on the chart, when you are in front of the chart, you always see setup. That's the thing.
yes,
You
yes,
always see setup,
yes.
and until you don't enter the trade, then you find out that that setup that was showing you, it was actually not a setup. It was
Yes,
just
it happened to me yesterday. I was just I was trading indices and I was like, I need to sell from here. I need to sell from here. And then I was like, wait, did I use my strategy to enter? No. Is he selling in the 4 hour? Yes. Is he selling on the 1 hour? No. I just closed the trade. That was like, so it takes a level of, you see, now it's not about strategy. It's not about coming, showing up and reading webinar or YouTube videos. It's like sticking to what you know that works. That's literally, it's even the hardest part. That's the crazy thing. We could talk about structure today, draw trend line, draw bullish engulfing. I'm sure everybody on this call knows about PROZ zones. They know about break and retest. They know about support and resistance. Everybody knows. But you see, it's the timeliness of execution that matters, and that's what differentiates us. You would want to execute early or go to lower time frame to execute. Me, I will be waiting long, and then I'll have big stop loss. And then by the time it's breaking structure and going to my stop loss, you've left the trade this morning, you've collected your 50 pips and you've gone. And meanwhile, I'm still in the same trade that both of us saw the same buy, but you collected your 50 pips and gone, and I'm still there, and it will hit my stop loss, and I will feel like my strategy is not working. So that's where sticking to one thing and then refining it over and over and over, that same thing, that's just the only way you can actually make progress in the whole Forex thing. But I had to lose. In fact, this is the first time that I would lose and I would chest it. I would like, no, I'll go again.
You know how many times you don't lose. We've
You
lost
get
so
my
much.
point.
I feel like, man,
You
it's
know,
not
so
so.
yeah, so me, I see losses as part of the whole thing. I grew our account from $39 to like 800, and I can't count the number of times I lost. But everybody will be looking at, oh, you grew the account. Oh, you know how to trade. I say, guy, I lost a lot. So when I started again from $100 to 300, I lost so many times, but I won more. So I'm not like, it's like loss is actually part of trading. So it's getting to me now, like, okay, all those time when I would go like, oh boy, I just open trade for the week. I don't chop loss. So I know I will try again tomorrow. I will just laugh. I will just think about the laugh like it's actually part of the whole thing.
See the thing. I want you guys to know that everyone loses. Yeah, in this, and someone there. Andy, is it your mic? Are you somewhere noisy? Yeah. So see the thing, everyone loses. Anybody where they tell you say they know they lose. That's the definition of a guru. So when they say somebody in a guru, it's not actually a compliment. That's the way I see it. When they say someone is a guru in trading, it's not a compliment because what they portray is that they don't take losses in trading. So everyone loses, depending, regardless of who the hell you think you are. Banks, they take losses. Take that SVB Bank, Silicon Valley Bank. They took a loss. Look at Afri Bank that we used to have. Afri Bank that year. They took a loss. Oceanic, all of them would change their name to Intercontinental, to EcoBank. Everyone loses when it comes to this market. So I always tell people, run from people that say they don't take losses. And I'm not scared to say I take losses. I lose, bro. They always lose. When the month starts, I always lose. But at the end of the month, I always end the month in profit. So it's not by how you start, it's by how you consistently come back from those losses and how your risk to reward is. So I always risk. If I lose too much, I can take like I take 6 trades, and those 6 trades, I'm only risking a total of those 6 trades. I'm only risking like 2% of my account. Okay, so if I lose, let's say I'm 2% up. Say I'm 2% in profit, and I take like 6 losses back to back. I will not lose my account. I will only lose like 2% and small change. All right. But when I start to win again, I can make back that loss. I can make that 2% and go back to 5%, 4%, and whatnot. So it's still part of the game. You have to learn how to understand how to do your risk to reward, how much you risk per trade, how much you risk per day, per week, every week, and in a case where where you are in a bad run, how do you curb that loss, that kind of loss that would give you emotional damage? Yeah. So that's basically it. So you people should not see me as some type of person when they take loss. Even during my chat breakdown, I always say, if I take a loss, I always say, so I might say, oh, I took an entry there and it hits my stop loss, or I'm currently in this trade. If it breaks this low, I'll take my loss and whatnot. So I usually don't hide it because it's like that. It do be like that. They be like that in this market. And if I'm not comfortable with the trade, I leave. Just like how Friday on was when I told you guys to close. I was not comfortable with everybody taking that kind of for signal where I give. So that's really it. Nothing more, nothing too heavy. Yeah. So does anyone have any other question? Any question at all? Psychology, structure, price action, anything? Yeah, let's hear it.
You made mention of
Your voice is low.
can you hear me?
Okay, yes, I can now.
You made mention of something earlier about
Yeah,
1, 2, 3 candle. So
can do.
some of us are a bit confused like that with
Oh, it's
that
just
technique.
like, okay, this is the concept of 1, 2, 3. 1, 2, 3.
Okay.
1, 2, 3. All right. It's just
Yeah.
I just do it as candlestick. So let's say I now have one big bearish candle or two bearish candles and one bullish candle. That is a 1, 2, 3 already because it's a push, a retracement, and a continuation.
Okay.
All right. So the concept of 1, 2, 3 is this: you have series of candle pushing in one area, at least two candles, pushing in a direction. Then you either have one big candle or a couple of candles, like one or two candles pushing in the opposite direction, and you now have one candle that shows some type of continuation. That is your entry for a continuation to the overall direction. So, example, let me show you. This is an example of 1, 2, 3. Okay, this. All right, everything that happened here. You see series of bearish candle, one bullish candle, and a bearish candle continue to push the market down. Okay, so it's not just by taking 1, 2, 3 anyhow. You have to understand where you are in structure, where you are in the market. and it's also still not foolproof. Like this EUR/USD, why I was really strong on that bullish move was because on the monthly there was a 1 to 3. Okay, I had a 1 to 3 on the monthly series of bullish candle, one bearish candle, and another bullish candle. And this last month we had almost 200 pip, a 200 pip move from low to high. That's 300 pips. If you entered the same day the new candle formed, and you close the day the candle closed, this is 180 pips just by seeing that 1 to 3 on the monthly. This is another 1 to 3 on the monthly. This is another 1 to 3. Okay, this is another 1 to 3 pattern. You have a push, a retracement, and a continuation. A push, a retracement, continuation. Push, retracement, continuation. Push, retracement, continuation. The same thing with the monthly NZD USD. That is why I was really bullish on it. Push, one retracement, and a bullish candle, and I was expecting that bullish close on the monthly. All right. Bente, did you get that?
Yes, I'm taking note of that.
Okay, so that's really what 1 2 3 is for me. So look at this. 1 2 3, push, retracements, push. Now this is an example of a failed 1 2 3. Push, retracements, one candle push, you enter, you made small profits, then it came back to take you out. Okay.
So why is that? Like, is there a way for you? Is there a way for you to avoid such a scenario?
Yeah, it's that for that it's very complex. It's not something I can teach once like that. It comes with different technicalities. You have to understand. You have to know the type of 1 2 3s to enter, the type of 1 2 3s to not enter. What part or what area of structures to not take 1 2 3s. What areas to take it. So it's not something I can answer once or in a few minutes. It's something that it might take like 2 classes and a couple of months or a couple of classes for you to know which one to take, which one to not take, what time to correlate it with, what type of price action you want to see for you to consider that a proper 1 2 3 to take and what not to take. So it's like that. It does not. It's not just one class. I cannot just answer that in one class. For you to have more idea on that 1 2 3, you guys be part of the mentorship program, and even some of my students, they are still grasping the concept of the 1 2 3, but quite a lot of them made profits this last week just by taking the 1 2 3. So let me see. Let me see if I can show you guys one. There's one for the EUR USD. This is it. How can I share it? Okay. Okay, can you guys see this part, what I showed just now?
Yes.
Can you guys see it?
Yeah.
Okay, so what he asked me was that, is this a normal 1 2 3? I said yes. So he took that trade and this is April 24th. So if we go on EUR USD April 24th 1 hour time frame, you'd see that 1 to 3 played out well. This is it. This is it.
Yes.
It was this. This was the place he highlighted. All right. So we had that push, retracement, and push. If you had your entry anywhere inside here, you see how much you made. You see the profit. Say you took it here and your stop loss was below here. You see how much you made. You made 50 pips on the dot. All right. Now you can actually understand that it's not all 1 to 3 you should be taking. Like I took one on AUD USD. Was it on the 21st or 22nd? I took one on AUD USD and I lost that trade. I think it's the 1 hour on which it's either 21st or 20th. Yeah, I think it's around here. Should be around here. So let me check M15. Would be on a Thursday or Wednesday that happened. So I took that trade. I saw that 1 to 3 and I took it, but it was a failed 1 to 3. Let's look at it. Let's go down. Yeah, this was it. Exactly. This is it. M15. Let me highlight it. Yeah. So I had a series of candles pushing up, one bearish candle and a bullish candle, and I took that trade, and you can see it hits my stop loss. You guys can see my screen, yeah? Can you guys see my screen?
Yeah.
Yeah, so this was the failed 1 to 3 pattern. It happened again, 1, 2, 3. I took it again, and it was a failed pattern. So it's either this. Okay, it's not this. It's not this. This was 7:30 in the morning. I did not take any trades 7:30. It's this. This one. So this was around the time I took that trade. So you see that it failed. It was this trade here. 1, 2, 3, and it failed. It gave me all the confirmation checklist I needed, but it still failed. So it's not foolproof. All right. So that's one thing you guys should know. Every strategy, it's not foolproof. No strategy is foolproof. You would always take losses. Look at this one. This 1 to 3 worked, but this 1 to 3 failed. All right. So that's just it. But do you now understand the concept of the 1 to 3? Bente?
Yes, sir.
Yeah. So that's really nothing. Not that deep. Not really that deep. Any other question?
Sir, you have not opened the USD CHF, so I would like to know what you have there.
Oh, I should open USD CHF?
Yes,
Oh, I should analyze or what?
Yes, sir. I would love to know.
Oh,
Yes.
okay. No, continue. Yeah.
Yeah, I said I will actually love to know your opinion on USD CHF. What do you think the peer is going to do this week, or what's your trade idea now?
Okay. So for USD CHF, this is it. Still the same thing, 1 to 3 on the monthly. All right, new months just they come. Look at how the last month ended with some type of exhaustion. All right, so I'll take note of that. This tiny exhaustion where you guys know they take note of. I do take note of it, and once I see that, I always want to break it down. So let me. I have an order on USDCHF that I'm not sure will hold. Let me see. Let me see. Yeah. So I'll delete the order because
I cannot hear you from my end. I don't know if anyone of you
anyone.
is hearing.
Can you hear me now?
Yes, I can hear you.
Oh, sorry. I didn't know that I don't mute myself. So I have a level on USD CHF just right above where I'm having that current entry. But currently, you see this rejection here. There's another type of rejection that has started. So you would see that it's some type of double bottom. All right. So in a double bottom scenario, you expect the market to push high. Yes or no? Okay, yeah. Since I'm answering your question, I want you to be interactive with me.
Okay.
Yeah. So in a double bottom scenario, you expect the market to go up. In a double top scenario, you expect the market to go down. True or false? That would be true.
Yeah, true.
So now we see this exhaustion. One exhaustion that closed bullish above all this bearish. So there is a very high chance that we are going to get a bullish push. Now, if that bullish push starts, where is the next level potentially? This is the next level potentially where we might see the market. Now, Friday closed bullish, even with a lot of exhaustion on top, but it closed bullish above the open and the highs of these bearish candlesticks. So H4, you start to see higher lows, this spike, but the low is still holding sort of. So we can call this a low, a higher low. So what are we expecting? There has been some type of transition from lower lows, and now we are getting higher lows. So that already says we are looking for some sort of buys. All right, we want to get reasons to take a buy in this market. And currently, as of H1, we have some type of low here that is lower than the last low. So we want to either see this market push back down, give us some type of higher low, or we see this market come to break this high here. Okay, so there is a high here. So we want to see how the market will fare by tomorrow when we wake up. All right, we either get this market to reject and give us some type of higher low from this area where it currently is. You can draw fib like this and want to do that and say, oh, maybe if the market comes back and tap this, and once it taps the trend line and rejects from the trend line, the market has started to give higher lows. So we can actually get a valid reason for us to take this market for a bullish run, or at least that would be like 50 pips or 70 pips from here. So if it comes from here, that would be 80 pips. If it comes from here, if it comes from, say, here, that would be 70 pips. If it comes from here, that would be 60 pips. So it all depends. Before we start to look for buys overall, we either have a break of this high or the market give us some type of higher low. The market starts to show us some type of higher low, and we've already drawn a counter trend. If it does not give us a higher low and it breaks this low here, that is a break of the counter trend line. So it means we are pushing the market lower. So it's just like that. It's not that deep. You don't do too much. Just project and anticipate. Have a valid and a proper understanding of structure, and you are good to go for the most part. Price action is just you understanding how candles are painting. You project and you anticipate what the candles are going to do, and you go from there. All right?
Yes, sir.
Yes, sir. Yeah, man.
Thank you very much.
Yeah, yes, sir. Any other question? This class don't reach 1 hour now. It don't run over an hour now. So so let's see. That's 1 hour 3 minutes that I've started to record. Any question? Any other question?
No, we're good. We're good.
Okay, Ejiro is good. Bente, are you good?
I'm still here with you.
Okay, you're good. Anyone else? Anyone else? Any question at all? Okay, it seems there's no more question. Seems there's no more question. So I think we don't try today. I'll see you guys on Tuesday when I'll post a new chart breakdown. But I'll upload this on the YouTube either today or tomorrow. I'll upload it tomorrow so that you guys can get it. So you guys can just have a material to watch on Monday. All right, you can always fall back to it. All right.